Hello and welcome back to another video. For those of you who don't know me, my name's Jared, and in this channel we're going to be talking about stock investing, what I currently have going on in my portfolio, and the trades that I've made so far this month, and how we're looking, if I'm still buying, selling, holding. The whole idea is to give you guys some additional knowledge in your own investment journeys and see where I'm going right and where I'm going wrong, and do your own research. Thank you for everybody who's been watching any of my videos. It means a lot to me. I really enjoy doing this. We'll see if we can get some views on this video. And let's get right into the video. So, some of the buys and sells in the middle of May that I've been doing, or since the beginning of May, I've sold 20 of my 30 shares of AMD. Now, with that being said, I know I'm probably going to have some hate to anybody watching this, but I truly believe the reason why everyday investors, people who invest into individual shares, go wrong and actually don't outperform the market outside of day trading, that's a whole different story, is that they forget or do not pull profits. When you have shares that go up 100%, 200%, 300%, you need to reevaluate and you need to re look at that individual company, that share, and see if it still makes sense for you to be in that commodity share, whatever it may be, right? People reinvest real estate very easily. Oh, I have this amount of equity, it's paid off, I can get this for it, that's how much gains, whatever it may be. But I feel a lot of people don't actually do it when investing into individual shares. Where I'm going with all that is risk to reward, knowing what your plan with your portfolio is, and you can't look back. There's what ifs everywhere in this market. What if I would have bought Bitcoin when it was pennies, right? Um, if you think about it that way, and you go to sell a share at 2, 3, 400% profit, and you go, well, what if I would have just held? The market goes up and down. A lot of people forget about the downs until it's too late. Well, you're at the top or the peak when everybody's getting super excited and everybody's rushing to it. We're right around earnings season, and AMD did amazing things. They went from 190 something dollars a few weeks ago. They just hit over 465 today. That's amazing returns on your investment. But you got to reevaluate the PE, what it's going to, the risk to reward. Now, do I still hold shares of AMD? Absolutely. I own 10 shares. That's what I have remaining. And I do plan on holding those out until we reach another goal. So, probably $500, and I'm going to sell off. The reason being is that I want to lock in some of that profit, use that profit to buy other opportunities that may have more reward remaining. So, like SoFi right now, $16. Just went under $16. I think that's going to be a $30 to $45 share stock within the next couple of years. I do wholeheartedly see AMD becoming a $600-700 share company, which that's in the same amount of time. That's absolutely fine. I would have still made money with AMD, but I have potential of more money with a company like SoFi. It's just reevaluating my own portfolio and knowing when to pull my profits. Always take money set to aside for taxes if you're doing any kind of trades strategy, and make sure that you're buying the opportunities that are going to maximize your reward with minimizing your risk. AMD, Nvidia just announced that they were improving the chips that they already have in manufacturing, already being manufactured. So, is there a lot of pressure on AMD to really deliver at this point? And if investors start getting any kind of whiff of them not being able to deliver on this new series that they have coming out, which I think they're going to do just fine. So please don't get the wrong impression on that. They're going to be a great contender towards NVIDIA. But if NVIDIA sparks a rally behind them, they may cause AMD to go back down. Is it going to go back down to 200? I don't think we're going to see that anytime soon. Could it go back into the 300s? Absolutely. We're talking about short term. Long term, I wholeheartedly see AMD going over $500, $600, $700. But we're talking about, is that going to be a year from now? Is that going to be 6 months from now? Those are the things that I do not know, and I don't believe anybody really does. Once again, Nvidia just has this massive launch of this chip, and they just people turn and start buying them instead of the new AMD series chip that's coming out. It's hard to say what's really going to happen. If their growth stagnates any, it's going to be a sign for people to sell. And I don't want to get stuck where I was saying, what if I would have pulled profits and I would have bought more SoFi or other stocks that I'm going to show in this video. So if you want to see those stocks, please stick around till the end of the video. It would be great to have you here, and hopefully you guys learned something. So I did sell 10 shares of my AMD. I set a stop loss after they hit 430 for 412.75. I ended up getting stopped out at 412.75. Absolutely fine. That's what stop losses are for. It did drop back down to 406. I thought about buying back in, but that's how you start chasing, and the FOMO and everything. It really can get to you. I wish I would have bought back in. I would have had more money for other shares, but you'll see um, the reason why I'm not too upset about that a little later on in the video. I sold 10 shares on May 8th at 450. And yes, they went to 465, but once again, I'm pulling as we go up, and I'm still holding on to a third of my bag to see if we're going to get over 500. On October 6th, or I'm sorry, earlier this month, I sold a call option that was a strike price of $500 on October 16th for $50. That's $5,000. Of course, Fidelity takes their $2.83 a commission, whatever it is. And so I sold for a pretty significant profit on that. I bought it for $18.65 on the 4th of May. I pretty much sold the shares, got stop lossed out, saw it rallying back up, bought the call option, and actually was able to capitalize on that, increasing my profit. And that covers the losses that I've had in between what I've sold for and what it may possibly go to. You're talking I turned $1,865 into $5,000. That's just under a 3x, probably 250% profit. Once again, you always pull money to the side, keep it aside for taxes, and use some of the money from your gains to be able to buy other great opportunities. I'm gonna pull up the chart here for AMD. Of course, this is in a PowerPoint, so I don't get to scroll around and click like I normally do. But they're at 464.68, up almost 10% or 2%, almost $10 for today, and that's active today. And they still have great momentum going in. Their RSI is looking great. Their Williams is, we got some momentum going. I don't see that stopping. There's just too much going on with the war, the Gulf, or the Strait of Hormuz, and NVIDIA upping the power of their currently being manufactured chips, and then kind of waiting until there's an AMD rally to post that out there. Kind of tells me that NVIDIA is really starting to see AMD as a competitor, And AMD still has plenty of room to grow. Just because I'm selling does not mean you need to go out and sell everything you have in it. We don't want to miss out on opportunities. That's why I didn't sell my whole bag. On I bought 10 shares in early May of PayPal at $45 a share. And PayPal is still not looking great. We were just above $50. Things were kind of looking up. And we came right back down to our resistance at 45. And with that being said, I bought at the resistance. I think I'm going to be officially done buying PayPal. I just own everything I want in it. It's just hard when you get these kind of buying opportunities to not capitalize on them. PayPal is doing great things when it comes to aligning themselves with cryptocurrency and AI. And that's why I still want to be involved in PayPal. I know a lot of people are seeing it as a dead money stock, which is absolutely fine for them. I'm willing to take the gamble, I'm willing to take the risk and hold on until either we see some action, or as I've spoke about a lot further in other videos, if you want to go back and watch those about PayPal, where I went through the earnings and everything, their income statement. I think there's a strong chance that if it continues down to the lower side, it could get swallowed up by another company and they could just buy PayPal. Obviously, there's a lot more to that than just buying a company, but they print money, they got great cash flow, and they are still putting up good numbers, especially if they start getting into financial transactions with AI and by agents. That's going to be a huge model for them. And at that point, once they start introducing into that, they may sell off parts of their business, maybe not the entire thing. But I'm along for the ride on that. So PayPal is still a buy. I'm at how much I actually want of PayPal. I don't need to buy anymore. I'm happy with my standing in it, the amount of shares that I have. And we're going to move right on to something else I bought, which was Palantir calls. I've been buying September 18th, 175 calls. I've been buying them for a couple weeks now at this point. I only had two. They were up pretty significant, about 60-70%. I did not sell, thinking that Palantir was going to go back to 155. And nope, we dropped down to 52 week lows, which was fun to see, but that's why I've been buying more. With that being said, we've been bouncing around this 134 ish range. And I think Palantir is getting correlated with the SaaS companies, and then obviously with the war, they're a hated stock right now. You can actually see that their higher highs are they're not setting any higher highs. They keep setting lower highs, and then right where we are now is going to mark where we are no longer setting a lower low, depending on what we do this week. I'm excited to see the turnaround. I think it's about to happen. Once again, these calls are not something I'm going to hold out until the end. I do not plan on actually having the calls come to fruition. I plan on selling them for a profit before everything's said and done. They're 175 calls, so if we go back to 150 to 160 range, they're going to be valued at a much higher rate than what I bought them for, and that's the profit I'm looking to get. All in all, I do own about 6 calls, average of 640 something per. So you can do the math. That puts me at about a little under $4,000 invested into it. I'm hoping to get back around 10. That's kind of what I'm shooting for. Once again, you gotta pull your profits. If they start seeing any kind of surge this week, I'll be looking into selling. Now that I have 6 of them, I'm gonna wean them off instead of just trying to hold out on the 2 that I had previously, like I did, which caused me to end up at a little bit of a loss. So we'll see how that goes, but Palantir is actually looking like it's going to be a buy for me, even to include the stock. If we drop back down below that 130 for Mark, I'm probably going to be looking at buying Palantir in general, just the shares. These are going to be the stocks that I was talking about that I sold or bought with the profits that I made. Of course, it's not going to be for the full $4,500. You got to pull that profit and you got to actually set some money to the side for taxes. That's what a lot of people forget about. I bought D-Wave, IonQ, and Rigetti. All three of these are quantum computing stocks. I believe that quantum computing is a part of this agentic AI theme that is moving forward that everybody's throwing money into. But it's in companies that aren't already massively surplused or overweight right now. I think they have a lot of growth to them, but when they grow quick and they also fall off. So you got to be ready with stop losses. You got to be ready to pull your profits when these companies go. A little bit of news can spark the quantum computing. I do believe quantum computing is going to be a part of the future, a massive part of the future, especially with hackers. And then on the flip side of the hackers, you have the security. They're going to have to use quantum computing to be able to fight quantum computing, essentially. No one's going to be able to code quick enough. You're going to need quantum computers for that. So it's going to scale, and I think it's going to scale heavily. It's going to turn to looking at these companies, the fact that their computers have so much more processing power with a reduced imprint overall. And they're going to be partnered with like Amazon, Google, Microsoft, all these other companies that are investing all this huge capex spending. I think they're going to see a green light here in the near future. So D-Wave, we're starting off with the first one that I bought on the list, and you can see from the chart we've actually been seeing some upside, and we still got some good movement to the upside and momentum. We just actually hit our 150-day moving average, and we've kind of bounced off of that twice now. So what you got to understand when we're hitting some of these upper resistances is you have people who bought back here and they watch it go up to good profits, and then they watch it come back down, and they're willing to get out at a no loss, no gain. They're willing to just cut their losses, get out of the stock, and move on to the next one. And that's going to be an opportunity for us to continue testing these resistances and playing around that line, keeping it as a good buying opportunity. I foresee when these companies run, they're going to be getting 50, 60, 70% gains. That's exactly why I went in with these over buying back into AMD, because the risk to reward layout is just more in my favor in my own eyes. I think they're all going to beat their 52-week highs, in which case for D-Wave, that is a 2x from here, 100% gain. Just about, just around there. Once they get into the uncharted territory is when they really see some massive spikes, and that's what I'm here for. So I'm anticipating holding these for 1 to 2 years, depending on the cycle and the market cycle that actually happens. So D-Wave, if it goes down, I'm going to continue buying in more and more. And what does D-Wave do? I just pulled this from their website, and they are a quantum computing company, obviously. But right here, they're the only quantum computing company solving customer problems, helping them to achieve real business value. They are in production and comprehensive. They offer full stack of systems, software developer tools, so on and so forth. So they are actually doing the work right now. That's the reason why I went with D-Wave. I think they have some great things ahead of them. I'm going to get into their charts and their earnings report once they are all announced. Right now, we got D-Wave is going to be announcing earnings tomorrow. Rigetti is another one of them. They're announcing earnings today after hours. Same thing with Plug Power, who's on the list, and NVIDIA's announcing earnings a little later on. Once again, with NVIDIA, that's where I was talking about they might pull a little bit of the AMD spotlight, but that's absolutely fine. We're ready for that, as you can see by me selling some of my shares. And then we're going to get into IonQ. They, I believe, are a reported earnings. So I will get a video out on IonQ's earnings, but you can see major push to the upside. Great momentum going up, and we're seeing some good things. They have a 52-week high of 84.64. They are currently up 15% or almost or $7.42. That was as of today at 1 o'clock. They already broke up to the upside. There is no near resistances right now. It's going to be an opportunity. People are going to be selling off. Anybody who bought down here around $27, $28, they're seeing a 100% gain. They're going to be pulling profits. People back here who bought right before the downshift, they're going to be selling off to get out of to lower their amount of shares in IonQ and all these quantum computing stocks. And then this is kind of what IonQ already does. I'll leave it up here for a second for you guys to be able to read it. You can pause and read it. But essentially, they're making medical solutions, they're in drug development, and they want high yield with low data environments. And they're doing really great things in the healthcare, aerospace, and AI. They're already being implemented. They're doing great, amazing things when it comes to this that standard supercomputer would take years to do. They're doing in days. And that's exactly why I am in with IonQ, Rigetti, and D-Wave. And this is Rigetti. As you can see, I bought Rigetti. They bounce off this lower resistance at about $18, $19, and they're pushing to the upside. 52-week high of $58. That's almost a 3x away. They're up 7% or $1.37 so far today. They do have a resistance marker here at about $30. And I think when we hit that $30, we're going to blow, or sorry, 25, 30's up here. $25, we got great momentum up. When we hit that resistance, that is going to be where people were buying back here, so you are going to have a sell-off. So it may linger around that resistance, bouncing up and down for a couple of days, and then I think we're going to see some movement to the upside. Now, I pulled this from Fidelity. It's just what they put up there as to what the company profile is. And they are the multi-chip quantum computer company. They're doing things on a whole nother level, and they offer cloud services, things along those lines that everybody's getting into right now. And I think they just have so much upside potential. Once again, when these stocks run, they run. So once we start seeing these all-time highs, don't be scared to start pulling profits and setting stop losses, or a bit of both. Depending on how many shares you own, you might want to take 20% off the table at all-time highs and make up for most of what you've already invested, and then set some stop losses so you don't miss out on the future earnings or growth. Just remember, stop losses only work so well, especially when there's massive moves to the upsides and crashing coming down. They move quick. I bought Trade Desk. I bought some on May 8th. I bought some call options for the 5th January. Or I bought 5 call options on January 15th at a $30 strike price. I think people are overlooking what the trade desk has for potential with this AI. AI, all these companies are talking about ads to be able to maintain it and keep it free. If you remember what happened with online streaming websites, YouTube does it, Netflix, Hulu, Disney Plus, name them, they do it. Is when you first got them, it was ad free with your subscription based model. Cool. Then it wasn't enough, so now you have different tiers of subscription. You can go ad free without, paying for a larger subscription or a more costly subscription, and then you can remove the ads again. So, what do you think is going to happen with AI? They already have subscription, I believe Grok, and you have some premium AI features that you can access with a subscription. And now they're talking ads. So if they bring in ads, your free version is going to have ads. And then they're going to offer a subscription version without ads. And then you're going to have your base subscription is going to have ads once everybody starts using it. Once you build your customer base, that's one of the only ways you can build additional profit. And with it being ads, and that's exactly what the trade desk does, I see some upside potential. I know that their earnings did not go over great. You can see right here, up to earnings, they were building up some momentum. Got over that $25 mark, and then they dropped about $4 in a day. But then they started building back up, right? And currently, we're getting close to the 52-week range low, which is absolutely fine. I think people are overlooking what the trade desk can actually do. And once they start developing into the AI space and AI starts implementing more ads, I think that's when the trade desk is going to see some good potential. So it's a long term hold. I bought the call option short term when we were getting close to that 52-week low, just because I see it as a good opportunity and it was worth the risk. You're talking, I bought them for I think less than $1 a piece. Um, so $450 probably roughly. All right, Plug Power. I bought 5 call options on December or for December 18th at a $3.50 strike price. And you can see why. I bought those right before the massive run up. They have some upside right now. I'm not selling. Plug Power is about to report earnings today. I bought them ahead of earnings, which I know is high risk, but sometimes you gotta take a risk. And I believe in Plug Power. I believe in the hydrogen energy sector. I think that they're gonna they're gonna narrow the gap on becoming profitable. And once they become profitable, I think it's going to explode. I think people are going to start seeing, hey, this company actually can make it. And they're going to see a lot of upside potential. They've already they've just been taken off these last, few weeks. They're already at 357, up 45 cents just today, 15% almost. And I see them being over $4 to $5. Hopefully right after earnings, but it depends on how the earnings and the future guidance goes. If they start getting close to profitability, I think we're just going to see a severe uptick. All right, so I do have some call options out on NVIDIA. They're good until September 18th, I believe, and I am going to sell them all at $14 if I get there. That's a 100% profit, and with NVIDIA's earnings coming up, they always post insanely strong earnings, and the market always says and just kind of scoffs at them and says, nope, not good enough. Even though you grew 80%, we just wanted to see that 90 that you used to, or whatever it may be. It's never going to be good enough for these growth investors. With that being said, they tend to bounce back. So they already broke to 52-week highs. I think we have some more potential leading up to the earnings call. once I make my 100%, I'm done and I'm going to sell off. If it continues going up from there, awesome for anybody who holds NVIDIA. That's great. I'm happy for you. And we're going to take a look right here. So we just hit the 52-week highs again today. We just set it and we dropped back down a little bit, but we are above all of our key measures of support. And this is all before earnings. It's a story that goes, it's on repeat almost every single earnings for NVIDIA. Great earnings, massive sell off. Nobody likes that it's not growing even further or it's not increasing the growth percentage. They're doing great things. Don't let that slip by you. It's a good company with a lot more upside ahead of it. And I'm excited to have my call options. I may keep one or two just to see what earnings does. Maybe they're going to kind of flip the script on everybody and they're going to take off. With that being said, that is all my trades so far this month. If you enjoyed the video, smash the like button. Go back and watch some of the other videos. There's a lot of really good content in there. And leave a comment if there's anything you wish I would cover in these videos. Every bit of that helps. And I will see you in the next one. Thanks for watching.